Welcome back to another week of the Educated Homebuyer Live. This is with Josh and myself to answer mortgage and real estate questions, help guide you through the economy, the home buying process, everything to do with housing. Josh, welcome. Did they get that heavy sigh as they came on? Was that what started the show, or did that
Hopefully,
come before?
because that wasn't just my day, that was my week. You can share with them my joys of basically since last Tuesday, arm wrestling with this computer before finally capitulating and just bombing the whole thing out and resetting it today, which magically fixed it, and now I'm able to talk to the computer.
There you go. So Josh had some frustrations with his computer over the last week. I have to apologize. Last week, Josh, on air here, I was saying that you were freezing and somehow I was freezing. So nevertheless, we are here. So hopefully neither of us freeze tonight and we can get through an entire episode of streaming without chaos and my phone ringing. So phone's ringing already. But with that, guys, we're going to go over some charts. We're going to update you on what's happening in the economy. We're going to talk about, everything that you guys want to know. But in order to keep the show flowing, if you would do us a favor, start putting your questions in the chat now as we start looking at charts. That way, when we come out of here, it's really easy just to jump into questions and get things moving in the right direction. And also let us know where you're watching from. It's always helpful to know where people are in the country, to know where our audience is. So with that, Josh, let's do it and take a look right here at some charts. So this week, inventory actually ticked up a little bit. Again, we're talking about weird things in the market. A little bit of a bump in inventory could be because of, we had an election previously and that could have held a little bit of inventory back, but really minimal amount. We're up to 722,000 single family unsold homes nationwide. That's up 27% more than a year ago. Mike Simonson from Altos Research believes that we're going to see another 17% growth in unsold homes in 2025. So he does believe inventory is going to keep growing and that we're going to continue to see more inventory. One thing you'll notice this week is I moved this up just a little bit because it's often in the wrong spot, but we went from 721,576 to 722,032 homes. So just over 8,000 homes in changing there. Our peak is still at 739,434, and then the low all the way back in 2022 was just at 240,000. And then for context, 2015 we were sitting just over 1,135,000 homes. Orange County, sitting at 3,357 homes. That's actually down about 4% week over week, whereas Huntington Beach is up about 3% week over week. Either way, we've likely seen the peak in both of these for the remainder of the year. Should continue to see a move lower, with really the lows being somewhere, near, December 29th, 30, 31st, somewhere in that ballpark, depending on what actually falls on the calendar there. New listings. So new listings, 52,000 single family listings unsold, with another 7,500 that sold immediately once coming on the market. That's only 3% more sellers than the same week last year. So still getting a little bit more, but we've actually got a little bit lower rates than we did the same time last year. New contracts pending, 53,000 new contracts pending, plus $11,000. That's single families plus 11,000 condos. 9,000. What was that? That was you.
That was the other speaker.
That was you. That was you. 9% more than a year ago. And they're expecting also another 5% growth in sales in 2025 to roughly 4.2 million sales. So somehow they think that we're going to get more transactions, Josh. The only way that's going to happen, in my opinion, is with lower rates. And I know we're going to talk about rates and all that good stuff, but what are your thoughts?
I was going to say the same thing as what you were saying. Simonson says that we're going to see more listings on the market. Really, it comes down to interest rates and affordability. We got a little, I was going to say a preview. We got a little window of what it looks like with slightly lower interest rates there in September and October. We saw a lot of activity. We saw more homes going under contract. Didn't have necessarily more coming to market at that point in time, but everything at this point relates back to interest rates, and that'll be the $24 billion trillion question going forward.
All right. This one is actually the chart that I just mentioned. So I was actually a chart off there, guys, when I was talking about the 54,000 new sales and then 11,000 condos. That's what we're looking at here. And then the median price of new contracts sitting at 380,000, which is essentially unchanged. The price people are paying for homes is still about 4 to 5% above last year. The median price for all homes on the market is 430,000, which is up just about 0.5% over 2023. And then price reductions, Josh, sitting at what, 38, just over 38%, which is essentially where we were last week. And then an interesting chart here just shows that the average price that sellers are cutting is somewhere around $15,100. So depending on the price of property that you're buying, that could be a decent amount or it could be a drop in the bucket. So as we talk about all the time, real estate's local and it's definitely relative, depending on the prices that you're at. So we talk about first time home buyers, the average age, we've always said it's somewhere in that 33 or so ballpark is what's historically been the number. And then, we've got this chart here just showing that the average age of the first time home buyers now up to 38 years old, with the repeat buyers being somewhere around 61, Josh.
And
Thoughts on that one?
that's really just here, what, in the last 2 years.
Yeah.
So you guys like to ask, who is it? Who is buying these homes? It's people that are a little older, a little more established. We showed the chart last week, the breakdown by credit scores, higher credit scores than what we were seeing a few years ago. We got earnings reports from several big companies this week, and one of the big ones was Walmart. And the headline was, "Oh, this is great. We have sales are up," but they were seeing smaller transactions, but bigger transaction sizes because wealthier consumers, 100, I think they were defining it as 100 or $125,000 households in household income were trading down to Walmart. So it is really what we're seeing. I'm seeing more and more stronger buyers than what we've seen, and that's probably why sales volume is so low. Those are the only folks that at this point are comfortable.
Where do you
stepping and
trade
buying.
down to Walmart from? Target? Is that what happens?
Well, you saw Target got hammered. Target had same store sales were down and they got hammered today. So I'm looking at that going like, to me, I've never noticed a significant enough difference between those two that I would be willing to trade down
There's
from
definitely a
Target.
difference. There's 100%.
Oh, there's a big difference in the experience. You think there's a big difference in the prices? I'm
Oh,
going to save a
absolutely.
bunch of money if I go to Walmart
I mean, it
on the
depends on
same
what you're buying.
stuff, the same things.
Yeah, I think so. Yes.
Okay.
I mean, I grew up in a Walmart, and it's
You grew up in a Walmart?
I actually grew up inside the Walmart.
That's
No, I
awesome.
grew up going to Walmart, and what I'll say is, like, we don't go to Walmart a lot just because Target is way more convenient for us in so many ways. But whenever we do go there and we buy the same things, it's like, oh, this is definitely less expensive. You notice it. So I see that. I see that being the case for sure. This is a tweet that you had put in earlier. Josh, why don't we read it here, and then we'll ask a little poll about the what people think.
Yeah, so you see, it got 188,000 views, so it got traction. People were interested in this. It is a house being built for a sale north of Houston by Lennar, $163,000 price point. 2 bedroom, 2.5 bath, 1,000 square feet, 1,063, so almost 1,100. So it says, despite people hating on these smaller homes they're selling, not everyone wants a huge house. Some people want affordability. So again, we talk about median home prices. We see new home prices coming down. They're not making them cheaper. They're not making them more affordable. They're making them smaller. I saw a YouTube video of a development. It was like 30 or 40 of these, very similar to this. It almost looked like a condo complex. It was gated, but little detached units that were like 700-800 square feet. And those didn't even have a garage, but they were very affordable. So we thought we'd throw it in here and see what you guys think. Throw up in the comments. Would you be interested in something like this? If it comes down to renting versus owning, we hear a lot about tiny homes, but tiny homes are bonkers. Like if you've ever been in something that's 300 square feet and imagine living in it, I don't know. I'm big. I'm 6'5". That would just drive me out of my mind. Something like this, is funny, Jeb. I don't know why it came up. My wife and I, we went to the new Intuit Dome and we were driving through Inglewood and we were just talking about the neighborhood. I said, this is a lot like the neighborhood that I grew up in. And so we pulled up the house, and it was originally a 1 bedroom, 1 bath, 600 square foot house that had a master added onto it. So it was a 2 bedroom, 1 bath, 900 square foot house. So again, modern American, a little bit jaded. We all think we need lots of square footage and 4,000 square foot house and 3-car garage. But this, especially built and designed properly, which I'm sure the folks at Lennar did, probably a pretty nice house.
Yeah, I mean, interesting nonetheless. But I think for depending on where you are, what you can get for rental versus that. I mean, I definitely think there's some demand for it for sure. But let us know in the comments what you think. Would you buy something like this at that price point? All right, Josh. Ryan Holiday, the obstacle is the way. So we said this the other day, and I'll let you read it since you threw it in here.
So this comes back to, you say this all the time on episodes of the podcast. You say it to the listeners here live: control what you can control. You're here listening because you are considering becoming a homeowner. You would want to become a homeowner. We see so much pessimism, crazy comments. Some of that's just social media. But you're like, if you have that attitude, how are you ever going to get anywhere? So this came across, it was something that I had saved. I have a little thing that sends me clips of things that I had saved in books, and this showed up just yesterday, and it made me think of that. It doesn't matter whether this is the worst time to be alive or the best, whether you're in a good job market or a bad one, or that the obstacle you face is intimidating or burdensome. What matters is that right now is right now. We talked about, hey, the right time to buy a home was probably 2010 to 2013. And we had several of you pop up. Awesome. I was 9. I couldn't buy then, or I was 14. So this is when you're 33 or you're 35 or you're married or you got that job promotion. So it doesn't mean, hey, suck it up, buttercup, and just buy a house. It means you have to make the decision in the context that we're in. So complaining about things you don't control doesn't really help. And then Jeb, on top of that, this showed up in another one of my newsletters, and this is options according to Yoda: do or do not. There is no try. So I would say do or do not. There's no point in complaining. This is the environment that we're in. We have high interest rates, low affordability, low volume, low sales for realtors, less loans for loan officers. We can let this ruin our life and run around crying about it, or say, what do we control and what can we do to make it better? So if you're considering buying a home, if you're considering saving and investing so that later on down the line you can buy a home, just remember, control what you can control, and don't let pessimism and negativity overtake you, because it will never lead to
I mean,
now is
the perfect time to work on the things that you've said you were going to work on the last 3 to 4 years so that you could buy a house, right?
Yeah.
Because there's not that fear of missing out at the moment. So work on the things that you need to work on so that you're in the best position when you're ready. Population size, Josh, what are we looking at there?
Got a couple things in here that and we could have thrown a bunch of stuff in. I didn't want to bore you guys too much with this, but we get a lot of shocking on social media comments that are political in nature. This person's going to do this and they're awesome. This person's going to do this and they're awful. A big thing during this election cycle was immigration. That gray line there is, if we stopped all immigration by I think it's 2100. So in, what are we talking, 76 years, we would have 75 million less Americans. And that would be a problem. You see it in countries that have declining birth rates. It would be a problem. So the other 3 lines there are low immigration, moderate immigration, high immigration. So we need to figure out a way to make it work so that folks can come here, can immigrate, can become productive citizens, because we are not, as a country, Native Americans are not Native Americans in the traditional sense. Natural born Americans are not replicating at the rate needed to grow an economy and keep it going. So when you're deciding or saying, hey, I'm way in favor of this, I'm way against it, we need something there in the middle.
And speaking of Native Americans, Josh, next week is Thanksgiving, and we're going to be here the Wednesday night before, like we always are. Just easy transition into next week.
We keep talking about having turkey the night before, but we've never done it. We've got 3 or 4 years of the night before Thanksgiving having a show, and we've never done anything special for a Thanksgiving show. So we probably should, Jeb. But looking at this, this is in light of, again, political, the election, the Department of Government Efficiency. The Vivek and Elon did a very long and detailed op-ed in the Wall Street Journal, kind of explaining how it's going to work and what their plan and intention is. But why most people say this is an unsolvable problem is that entitlement spending is the problem. So entitlements, talking about things, Social Security, Medicare, that at this point is kind of like a third rail for any politician. A politician says, hey, we're going to cut that stuff. We're going to reduce it. We're going to get it in line, despite the fact there probably need to be changes. So that non-defense discretionary spending is becoming a smaller and smaller portion of the budget. So it'll be interesting, again, to see. I wish them success for all of our sake, because This leads to that money spent because tax receipts are less than that. It gets funded by borrowing. So this is the government credit card. Quarterly gross treasury issuance is a share of nominal GDP. So this isn't showing how many dollars they borrow. It shows how many dollars they're borrowing relative to the gross domestic product. And you can see we had that giant spike at the beginning of COVID, but other than that, this is as high as it has ever been, which kind of leads back to interest rates. For the government's sake, we need interest rates to be lower. For household sake, we need interest rates to be lower. All of that fun stuff. So here, I knew I had Walmart in here. I thought I had Walmart in here. I wasn't sure. So Bloomberg reported that Walmart's price changes were roughly flat for the quarter and actually deflated by over 4% for general merchandise items. Nearly 2,000 rollbacks were permanently converted to lower prices. Doesn't sound too inflationary from where I sit. So again, anything that you take out of context like this, you have to be careful. But again, I've got 2 newsletters of dudes that read every one of these earnings reports. They're on every one of these conference calls, and they're pulling things out, and they start noticing themes of what's going on. Home Depot and Lowe's both reported this week. It's definitely telling a sign where we get retail sales a couple of weeks ago. Jeb, and everyone's like, I see, retail sales are great. Consumers strong. They're buying stuff. And then you get these retailers come out with their reports, and they're like, it's not bad, but it's not great either. So this also, the value added price deflator, this is basically prices for goods after they have been improved. But just looking at that, we had that giant spike, and now we are down back to where we were in that 2018, 2019 range. So a lot of room to go lower. You come out of a recession, we went below 0 on that. But again, just signs of deflation, disinflation, more accurately, of goods improving in terms of the prices year over year, the rate of change, not the actual rate of prices. Thought this was interesting, Jeb. We are down almost to 50-50 odds of a rate cut in December. I didn't pull the numbers here, but David Rosenberg, a guy that I'd love to follow, generally a market bearish type of guy, bond bullish. And for the short run, what he's saying is if we only get one more Fed cut, we're going to end up somewhere in that 4.7 to 4.8 range on the 30-year Treasury, the 10-year Treasury. So from that perspective, this is going to go a long ways towards telling us what happens. And this is the Fed funds futures market. It's to a degree, it's a prediction market. It's people betting with real dollars. Wanted to throw this one in here. This is market forecasts are almost always wrong, but about the future path of the Fed funds rate. So this is the actual Fed funds rate, the darker green line. Then the dotted one is Fed funds futures at different points in time. So we can see from like 2009 through 2018, the futures market kept saying, hey, rates are going up, rates are going up, rates are going up. They never did. When rates started going up, right there at the beginning of 2017, the first Trump presidency, the futures market was telling us it's going to moderate, and it kind of went up higher than expected. So they're almost always wrong. So don't put too much weight into it. We've seen it. For those of you that are here week after week listening to us, we've seen that over the last few years. We look at it and you get whipsawed in the other direction. I kind of zoomed in this week, Jeb, on the 10-year Treasury. So I wanted to show that up channel. The good news is we're out of the bottom of the up channel for the last couple of trading days. But that red downtrend line there, we're above that. So we want to be below that red line, below that bottom green line, and get a break lower. And until we get more data, we're unlikely to see that. So likely to just continue sideways, barring something unforeseen here in the future. So what you see, the daily change, the weekly change, very minimal. Pretty much for the last 2 weeks, rates have just treaded water, trended sideways. Right at or below 7% on the 30-year fix for well-qualified borrowers. FHA 6.25, 6.5, depending on your qualifications and what you're looking at paying.
All right, good stuff, guys. And those of you who are in an interest rate that you think you'll be able to refinance in the future or want to refinance in the future, but don't want to follow rates every single day, like Josh and I do, you can go to jebsmith.net/rate watch. If you're watching this, you can actually scan the QR code, or you can go to the educatedhomebuyer.com/rate watch. Both of them get you to the same place, if you will, which is on the list. I think we have probably 75 or 100 people on that list to notify once rates actually come down. And we have all your information and that sort of thing. So it'll guide you through the process. But either way, let us do the work for you and let you know when things are there. And then lastly, as we always do, these are the states that we can help in. So if you're anywhere in the United States, Josh and I, our team, can help guide you through that process. So reach out, let us be a resource for you, and ultimately guide you in the right direction with a free, stress-free process. Really what it's all about. So with all that, I think there's about 90 of you on at the moment. Where are you watching from? Let us know where you're watching from. Did we get anybody commenting about our about a house, Josh? About the house? Would they live in it? Would they
Jill
live in the
says
house?
we're looking to downsize. I would consider it.
All right.
Willing
Where's Jill
says,
located?
yeah, that's a good question, Jill. Where are you located?
Yeah, where are you located? That's helpful as well, because if you're in like rural area, Houston, whatever, the South, I'd see more people doing it. If you're like in California by the beach or whatever, you're going to move to Houston and consider something like this. That's what I want to know. Anyhow,
Willing had a comment. Yes,
Yep.
100%. I'm a hobbit, so I'm willing to live an elf lifestyle.
All right.
This is slightly not in reference to that, but Susie Vidal throws this out there. Getting tired of finding an old home that's just as expensive as a new home, leaning towards, it's hard to read them when you take them away, Mr. Jeb.
Oh, sorry, my bad. Yeah, hit it again. Here we go. There you go.
Leaning towards getting a new construction, and they offer 5% interest rate plus 1750 in incentives, which most of them are giving you even more in incentives than that. What do you think? What are your thoughts on that, Jeb? Because we've seen the share of the market, so less homes selling. So it's not that there's more new homes selling. It's just that the percentage of homes that are selling, there are more new homes as a percentage of the total market than ever. So a lot of people are making this decision.
Well, let's talk about some of the pros and cons of new versus old real quickly, not to dive in deep on it. So, California is different because most of California, where we are, is built out. You only have these infill pockets. So, I don't think we're talking about that here. But traditionally, new construction is typically going to be more expensive than existing construction most of the time. But with that, you're usually further away from the epicenter. You're usually in a smaller house on a smaller lot. There's just multiple things about a new house that existing construction, in my eyes, still kind of, I would choose existing in many cases over the new for some of the things that we're talking about. Now, that's not always the case, but in many cases it is. Sometimes higher property taxes come with new. So there's a lot of different things. So would I consider a newer home, in general? Like if I were already considering new, and I found something in an area that I liked and I could get a 5% interest rate today and they were paying me to do it. Yeah. But I know, Susie, you've been on here for over a year and you haven't bought anything, right? So what's going to make you push? Like, what's the change? Why? If we say, yeah, are you going to go buy a house, or is this like an ever going thing? Like at some point there's got to be a decision made. So what makes that decision for you, I guess, is the better question.
Yeah, I look at it, and it's hard to argue with people when they make this decision. When you look at the difference in the monthly payment, there are some things, you may have to put in some landscaping. You may have to put in window coverings. You're going to have to come up out of pocket with some things, but it's what the builders are doing to incentivize this. It's understandable why a lot of people feel like this is the only way that I can do it. So I wouldn't argue against it if that's what you decided, but definitely, like Jeb said, would love to see you come back and be a success story and tell us at some point that you've been able to buy a home. Now, Jeb, I believe this is another person who reached out to us today, or they have a very, very similar situation. So DBE Adesanya, hopefully I didn't butcher your name, is a refinance from 5.99 30-year fixed to a 5.25 15-year fixed, worth it, on a $400,000 loan with $10,500 in closing costs. 28 years left on the original loan. What's the break-even point? I'll work on this. It makes it difficult when you're not comparing apples to apples. A 30 and a 15 are very, very different. But what I would say is $10,000 is a lot of money when you could just also start making that 15-year payment.
1,000%. That was my thing.
Yeah. And Jeb, I don't know if you remember, we had a listener to the show reach out to us in Georgia. They had bought 7, 8, 9 years ago. Their mortgage broker called them up when COVID first breaks out and says, hey, we can get you a 3.5% interest rate. So they refi to a 30 year at 3.5. Calls back like 6 months later. Hey, these rates are bonkers. I can get you 2.75 on a 15-year. Might have been even better than that. So they did the 15-year. Well, long story short, husband loses his job.
Mhm.
They now have 50% of their income and they have a much bigger house payment, which was no problem when both of them were working. Took him a lot longer to find a job than he expected, making a lot less than what he was making previously. They ran up $60,000, $70,000 of debt in the year that it took him to get a job. And they ended up taking out a 7% 30-year mortgage to pay off the debt and get back to a manageable monthly payment. So I am not anti 15-year loans. I just want to see someone in a really strong financial position. Maybe you got a giant 401k, you have some nice investments, you have a bunch of equity in the property. I don't like seeing people risk everything to just prepay that mortgage, even though at 5, 6, 7%, it can make a lot more sense to prepay a mortgage than for those of you that have 2.5, 3, 3.5%.
Yeah, just set up your amortization, like just make an extra payment a year, make payments like a 15-year fixed, whatever it is, just to pay down the principal faster, without paying $10,000 in closing costs. I mean, the closing costs alone are going to help. I mean, are going to offset some of that savings, um, that you would have by just doing it now without having to do the refinance, right? There's nothing keeping you from making the payments however you want. So that would be my goal, or my recommendation versus going into a 15. I've seen a lot of people do the 15, like you said, Josh, and then come to regret it because of changes in everything else. So
Jeb,
lifestyle.
this question is going to be a little redundant, but a slightly different angle. SNN Media says, my brother just bought a new build home, 3,000 square foot, 700 grand, 0.61 acre. Said Lennar gave him 16,000 in closing costs and a 5.1% interest rate. Meanwhile, there's a nice used 4,200 square foot home on 1 acre of land that is listed a few blocks away for 750, but has been on the market for 60 days. Is there a benefit to buying from a builder? I don't know if there's anything to add that you didn't already say before, but this is largely the reason why. I mean, if you're looking at a 6.875 rate versus a 5% rate, that's going to be a significantly lower monthly payment. Now, this home is bigger. This home is on a bigger lot, built 2 years ago. So it's not like it's not a new home. But when you're looking at the builder's ability to incentivize that purchase with covering closing costs and a subsidized interest rate, it can oftentimes make a lot of sense to just buy the new home.
Agreed. Agreed. Yeah. And then there's comments. Susie had a comment about, hoping that rates and prices go down, simultaneously. Probably not going to happen. I mean, I think you'll see prices level off. I mean, it depends on where you are, right? High inventory areas, inventory is growing like crazy. You're probably going to see prices drop a little bit. Not crash, but drop, because the market is going to slow and it's going to stay kind of in this, weird, just, it kind of feels like we were at the same time last year, Josh, where we didn't really know what was going to happen, and then all of a sudden we got lower rates. At that time we were expecting, some changes in CPI to come down and in the job market to soften, and since then all of those things have gone the other direction. So we don't really have those things kind of just sitting there like we did last year at the same time. And that's why, the show is that the housing market, the 2025 housing market, largely depends on mortgage rates. Without mortgage rates moving lower, home sales aren't going to be nearly as good as people are predicting them to be. And you're just going to have less transactions, less just volume in general, because everything. I mean, builders aren't going to build as much. It's everything. Everything is built around rates, right? The developments that are already planned for construction will start, but new starts, that sort of thing, it's going to stay. And what that does is it's a cascading effect that becomes a bigger problem down the road when rates do get lower, and then all of a sudden there's not enough supply again because builders stopped or slowed down their building because of rates. So we need rates to come down. We don't need them at 2 or 3%, but rates in the mid fives would get the housing market moving along enough where you would see transactions, you would see inventory, you could see a balanced market that would be good for both buyers and sellers. So
we reference several times Bill McBride over at Calculated Risk about 2 years ago. He did an article titled 7 Years in Purgatory. So if you want to Google that, you can see it. It's a free one out there. But he explained why we are not set up for a crash, but we are set up for an extended period of time of not nominal, but real home price decreases. So meaning that home prices don't keep up with the rate of inflation. And as inflation is kind of normalized, we have seen just slightly positive real home price growth. But I don't think that's unreasonable. We talk about interest rates and home prices. For most of the country, highly unlikely that you see lower home prices and lower interest rates. If rates come down, we have a lot of pent up demand, people who didn't feel comfortable, who their life cycle told them, hey, this is the right time to buy, but made the decision that financially it's either just not feasible or not wise for us right now. When those people get a window, they are going to come into the market. So from that perspective, I still go with my base case that we have 5, 6, 7 years ahead of us of low growth, 2 to 3% home price appreciation and 2 to 3% inflation. So nominally, we're not seeing increases in home prices and possibly a small loss in real home prices.
No, I agreed. We kind of said that you needed some years of slow growth sideways to get kind of back to that trend, and I think that's what we're probably going to see.
Jeb,
Unless something crazy happens.
We got
But
your
hold on,
feedback
Susie.
here.
Susie gave us a $10 super chat, so thanks for
Oh.
that, Susie. Appreciate the kindness, if you will. What were you saying, Josh?
Jill circled back. She's near Temecula, so I don't know that anyone in Temecula is building the 1,000 square foot homes, but I could absolutely see it in the Inland Empire. I could see it in the Central Valley. Now it's not going to be $163,000, but maybe they could build a $350,000 house, and I think a lot of people would be interested in that product in the Inland Empire and some of the more affordable areas where the land is a little bit more reasonable. We actually had a couple of follow-ups on that, Jeb. Maddie says, depends on the lot size. If the little houses are 5 feet apart on postage stamp lots, they should just be sold as townhouses rather than a single family home. Well, if they're not attached, they're not going to call them a single family home, or they're going to call them a single family home. But the ones I was telling you guys about in Arizona, they were really close. They were 5, 7 feet apart. But I mean, that's the reality. We have homes here in Huntington Beach, Jeb. They put up 4,000 square foot houses 5 feet apart. So that's more the norm than not. But I will say, Jeb, I was watching a YouTube video on a house in Boise that had brand new construction, dual RV garages in case you have his and her RVs, but it was on a 1 acre lot, 3,000 square foot house, and it was spectacular for 1.75 million. So I was excited to move to Boise until I found out it was 1.75 million. But I think I could do without one of the RV garages, so I could probably get it a little cheaper.
Probably 1.16.
Yeah.
With that, what do we got? We don't have a lot of questions, Josh. You have some comments. If you have questions, put them in there. It helps the show flow. You guys are the reason we're here. Josh and I get to talk to each other off air. So we don't actually have to do this. It doesn't work as well if there's not questions. So if you have questions, let us know. Let us know, what are you doing for Thanksgiving? How's that? Let us know. Are you staying home? You traveling? Are you guys travelers on Thanksgiving? Do you fly? Do you drive?
Whose house are we going to? It's a housing show. Whose house are we going to? In-laws, grandparents, going to the kids'
I'm actually
house?
supposed to be in Palm Springs, Josh. I'm going to the desert on Thanksgiving morning through the weekend. And I look, and no longer 80 degree days. We're looking at high 60, low 70 degree days, cloudy. I'm like, well, what are we doing? Are we still doing this, or are we canceling and just staying home? Because I can get, something similar here.
We were out there last weekend and there was no pooling. It was plenty warm for a nice day on the golf course, but there was not plenty warm for throwing on the trunks and heading to the pool.
Kids in a hotel room does not work very well. So we need warm weather. We got water slides.
I heard you guys were going to Eddie V's for dinner, so it can't be all bad.
That's what you heard. I haven't heard that.
Well, it was suggested. Your wife didn't follow back up to say whether she liked the idea or anything of the sort. She asked for suggestions, and we wholeheartedly recommended Eddie V's.
Well, I'm glad that she declined that for my budget, and I don't really want to spend $60 on a kid's steak. So, anyhow,
kid's steak, you're going to pay more than $60.
Well, there you go. See, I don't want any part of that. I mean, I only got a $10 super chat. It doesn't even pay for the valet to get in there. Anyhow, I digress. What
Well,
let's
this is a follow-up comment. Flash of Light says my 2021 2.25 PITI in the 15 years, the same as a 7% 30-year in 2024. I'm down to 11 and a half years left to pay off. So a lot of people were able to play that right, and get into something, and you're in a great situation. So congratulations on that. The market gave you an opportunity and you took advantage of it.
Yeah. Not sarcastically, but why are you on an educated home buyer show? You have your house, you're going to pay it off. Are you buying something else? Or are you just someone that stays up to date on the market? Or you always like to know people's mindsets behind being here, especially when they already own real estate. Is it just fun conversation to jump in? Is it, something you're trying to gain from or teach us something? We'll see. Let's see. We got a question here on, what is this, airsoft test? How are South Jersey trends looking at the moment? Still low volume, question mark. So probably know well enough to know that Josh and I don't follow the Jersey market well enough, but what I do know that Jersey and the whole Northeast was, suffering from for the better part of 2024 is just still low inventory and multiple offers and competitive markets, so on and so forth. Unfortunately, I don't know enough to know whether that's changed or not over the last couple of months with higher rates. I have to believe that with rates being higher, it's definitely slowed some of that. Now, has it gotten back to normal? My guess is no. But my guess is it's still probably a little bit of what it was. It's not going to be like the Floridas and the Texas, areas where inventory has grown back to 2019 levels and the market is, much slower. So, but I'll tell you, here in California, I've noticed it. It's a slower market, but there are definitely people out there still looking to buy. That's what's really, really, it's not interesting because people are always looking to buy, but it is a slower time of the year, seasonally. And this is generally when things slow down already. And so, I could tell you my career, 20 years of this, how busy have I ever been in November and December out of those years? Maybe 25% of them. Most of them, this is a time I naturally like to slow down as well, just during this time. So, but what I will say is there are still people out there looking, people calling on listings, and but it's nothing, nothing like it's been the last couple. So, anyhow, Josh,
we got some answers, Jeb. You
we got
asked what
answers.
everyone's doing.
All right,
So
let's hear it. Let's hear it.
Susie's staying home.
All right.
Heather also staying home. I thought someone told us they were going somewhere, but we got a bunch of homebodies. Here we go. Joyce, regular listener, I'm traveling at the end of the week for Thanksgiving for future Butterball turkey dinners. And then, Jeb, you did get a follow-up here. How am I missing this now? Jill co-signs for me and says Eddie V's is great.
I know Eddie V's is great. I've been at, I just don't want to pay the price of Eddie V's with an entire family for Thanksgiving. Because
so you can go with your
limited
buddies
menu
and have a steak, but your children can't eat what you enjoy.
Absolutely.
Yeah.
You
guys,
exactly
that's an
what I
insight
said.
into the type of dad Jeb is.
And exactly what it would be if I had a pet. I would eat well, and the pet would eat regular food.
My dog eats better than I do.
See, I know that's a problem, Josh. That's a problem. That's why you have computer issues. You spend more money on other things.
I can't afford the computer.
Focusing on the things that actually get you money. All right, here we go. This show is off the rails this evening.
More comments than questions. Lots of comments. We have the same number of stuff over here, but yeah. And Jeb, here's the problem. The SF Miners, I believe that's a San Francisco 49er reference. I could be wrong, but where can we ask questions? Right where you ask this question. Throw any question you want in there. Just throw it right where you put that question, but make it about housing and mortgage and real estate, and we'll answer that.
All right. Here's a question asking about advice on how to select home insurance with wildfires, natural disasters being more common. So, I don't know that I have any advice on it. I mean, what's going to happen is when you go out and start shopping for insurers, or home insurance companies, rather, I would talk to a broker first off, just like a mortgage broker. Talk to an insurance broker, because typically they have access to multiple people that can provide insurance. You can still try the big box insurance companies. Depending on where you are, they may or may not even lend in your state. being California, like some of the big ones are gone. So, a State Farm no longer does insurance here. I think Allstate's gone. So you might have to check around. But what I would say is most of these companies are going to tell you, for the most part, what is needed for basic insurance. Replacement cost, that sort of thing. You get to change things like deductible, and just minor things on the insurance policy. So picking one, I don't know that I have any advice. I say go with the least expensive that kind of fits what you're trying to get coverage wise in your property, right? If you're in a condo or a townhome, you might be able to adjust some of the numbers a little bit to make it less expensive or pay a little bit more for more coverage. But at the end of the day, I would say that most insurance is pretty typical from company to company what they offer. You can always change the things to make, the coverage different, which obviously is going to affect the premium. So, but outside of that, advice, Josh, do you have advice?
Just make the calls. Don't go to one place. What I get a lot of, Jeb, for buyers, everyone has auto insurance, and I have yet to see a person buying a home that doesn't have a car, and I don't have most people that own a car don't insure it. So they go, I'm just going to go with my auto insurer. Could be great. So I would absolutely make the call. They can generally bundle like Flow on Progressive and get you a good deal there. But definitely make the calls. What I will say, some of the big names, I'm not going to call anyone out here because they're good insurance companies. You want good coverage and a good company backing you up. But some of them are an utter pain in the ass on the front end for us to deal with, which means more work for you because we have to tell you, call your insurance company and let them know to send us a replacement cost estimator because they make you request it as if this is some sort of private personal information on a public property. But definitely make 2 or 3 calls. It is not that hard. They don't need a lot of information. Most of the information on the property is a public record, and you can have thousands of dollars of difference between coverages.
All right. And Night Panda, $20 super chat. So we're getting closer to me eating at Eddie V's while the family
You are going to
home.
get your Eddie V's covered before the night
Eddie
is
V's
up.
while the rest of the family stays home. This is great. No, thank you for the super chat, Night Panda. So appreciate it. No, while we're on the insurance company, I have a question, insurance topic. So I asked Josh today, you ever heard of Tesla insurance? So Tesla insurance. Well, insurance on a Tesla. I don't know if all Teslas are like this or just the Model S and the X or whatever, but my insurance is astronomical on this car. In 4 years, the value of the car is depreciated by like 75%, but my insurance has essentially stayed the same. So the cost to replace that car is way less than it was, but yet my insurance hasn't gone down. And so finally, I was like, you know what? I looked at Tesla insurance a couple of years ago. I looked at it today, and it's about about 60 to 70 bucks cheaper per month for the coverage, same coverage than what I have through Safeco, the company that insures my car. Has anybody had Tesla insurance? Has anybody had an issue like a wreck and had Tesla insurance? That's what I want to know. I don't want to know if you have Tesla insurance. I want to know, have you had an accident and had Tesla insurance and what the result was?
Jeb,
That's the
this
better
is
question.
this is what I'm hearing. If this man can shave $70 off of your insurance bill with equal coverage,
You can't. I tried.
Think of what the Department of Government Efficiency is going to do.
Fantastic. Yeah, I don't
just
know.
rip costs down across the board like that.
Well, it only works if he can actually fix it. If somebody actually comes and does I have an adjuster and all of that if I get in an accident. If nobody shows up, then we have a problem.
Jeb,
like the government.
We've got a couple of good questions here, real questions. So, of course, a nice girl. So this one right here. Awesome question. And this is funny. We were just talking. I did an analysis. I have someone list out all of the questions on a spreadsheet that you guys have ever asked going back about 2 years. We threw it into either GPT or Claude and said, hey, summarize these questions. And it's basically 25 questions over and over again. And yet this one has never been asked. So Oscar wins the uniqueness prize for today. How do you stop mortgage trigger leads pending potential borrowers? And he followed up. He meant pounding potential borrowers. By pounding, he's not kidding. He means pounding. If you call me up and we do a loan application, we pull your credit, we do a hard inquiry. The bureaus, not only they get to charge me an exorbitant amount of money for pulling that credit report, they get to sell it to 70 or 80 or 90 other people who want to know that you are in the market for a mortgage. And they do this under the guise of, well, they're helping you shop. But what happens is your phone, like I literally had a screenshot, you can make on a phone, you can do the screenshot that just scrolls. I had one that it was a screenshot like 3 feet long within like 3 hours of texts, voicemails, and missed calls from lenders just hammering that borrower because they know this is someone in the mortgage market. So mortgage people, a lot less refi volume, a lot less purchase volume. They've taken to buying these triggered leads, and for the most part, they're going to lie. They'll pretend to be your current lender. They'll pretend that they're the lender you just talked to, following up with you to get some more information. They'll tell you, hey, I can do a better deal. They have no idea what deal you got. You could have the best deal on earth, but they will always tell you they give you a better deal. So you want to avoid this. You want yourself to be in control of that shopping process. So probably 7 days or more before you allow any mortgage person like Josh to pull your credit report, you want to go to optoutprescreen.com. Jeff, can you throw that in the comments, or is your screen too little?
I'll do some. No.
Optoutprescreen.com. So you're opting out of all pre-screened offers of credit. And what that is, those mortgage trigger leads are a pre-screened offer of credit. The person is saying, hey, we only want credit scores above 620 with the mortgage inquiry. That way we know we can make them a firm offer of credit. So with that, they cannot call you. You want to get yourself on the do not call list so that they cannot call you. All of those things will protect you. And strangely, I don't know why the bureaus are so bad at having phone number information. Maybe only 40% of my borrowers have a phone number on record with the credit bureau. When we send our order over, we do not send your credit report so that they don't get it from us to hammer you with that. But if there's one thing in this process that I would tell all of you to do is go out and do opt-out pre-screen and get on the do not call list right now today.
All right, good stuff. We do have a super chat here coming in from SF Miners again. $10. Man, we got half a steak. We got half a steak so far. We're good.
Well, no, Maddie said go to the Morongo buffet. You have more than enough.
No, maybe that's where Maddie's going for Thanksgiving.
He's inviting you.
Maybe meeting me there. My city is building around 1,600 dwelling units by 2026. Should I wait for that? Do you think the prices of existing construction will go down? Do I think existing construction will go down? Overall, no. Nationwide, I don't think so. Josh kind of already hinted at it. Nominally, prices are probably still going to stay positive, whereas, real prices maybe right below the trend, if you will, or right below, positive growth, somewhere in that ballpark. I don't know. What would be the reason for waiting? 1,600 units, depending on where you are, how much inventory you already have, does that help? Does it not? I don't know. But what I can tell you is if you're buying new construction, try to get in the early stages of that 1,600 so that hopefully you can reap some of the benefits of them building later phases. But again, not enough information to really tell you yay or nay. I waiting 2026, what's that, a year and a half before they start construction? And then, or maybe that's when they finish. I don't know. Yeah, not enough info. I don't know where rates are going to be. I don't know. I mean, locking in something now is, what now is. You don't know what the future holds in any facet. So you can only control what you can control. So I don't know what I'd be doing in 2026. There was another question here, Josh, that I thought was a good question. It actually came from Flash a Light again. Says, how does the homeowner's insurance contingency work in California? Can I can I bail if the premium is $1,000 a month, or if the only insurer is Fair Plan? Yes, you can bail either way, right? If the insurance cost is too high for you essentially to move forward with it, that's your out. So you have the ability to get insurance, but you don't have to accept any insurance. It still financially has to make sense with your transaction in order for it to for you to have to move forward with it, right? Because that $1,000 a month or that Fair Plan could push your DTI out of whack, which in case you don't qualify, and therefore you're not having to move forward. So yeah, you get that option now to make sure that the insurance is reasonable for you to move forward.
And the good news is usually within a couple of days, you can get that quote dialed in and taken care of. A couple of
and you're probably not going to have that problem unless it's in really close to a fire line, right? I mean, The only places I see obtaining insurance at the moment are those that are in high fire areas. Everywhere else, pretty normal for the most part. In the sense of being able to get insurance. Yeah, maybe it's a little bit higher than it has been, but it's not. You're not able to get it.
So we got a good, easy question here. John says, are we able to do a 30 or 60-day lock on a refinance? Absolutely. A refinance should never take that long. So what I'm assuming is you're wanting to know for either an EARL, a VA EARL, or an FHA Streamline that have waiting periods. So you're wanting to lock, make sure rates don't get any worse before you get past that waiting period. So you absolutely can do that. Joyce also followed up, is it expensive to switch from your original lender in a refinance process to another lender that offers better rates? It's not expensive. By definition, it is cheaper. You are not limited to your current lender. So good news, Joyce, you're already on the watch list. We have it ready to go and teed up. As soon as we get a dip in these interest rates, we'll be able to get you covered there. The lender that you actually closed with, kind of middle of the road, not one. There's a handful of lenders that we can look at and go, those are expensive lenders. The one that you're with, retail lender, not known for great rates, but not known for some of the obnoxious high interest rates either. So who did your initial loan, who is servicing your loan, who that loan has been sold to, doesn't dictate who you can go to or what you're going to pay. And they're not going to do anything cheaper. Everyone has a certain cost to put loans on the books and a profitability measure that they want to go by. So by all means, you can check with them, but you're not limited to them.
All right, Susie just gave me $20 and told me to go get a turkey. So you were getting closer, guys. I think the turkey's probably, I can get a whole meal for what we've got tonight.
I just want you guys to know, at
Or
no
at least me.
point, at no point did Jeb say we needed $200 so that we both could get a steak. Jeb's just
No.
worried about himself. Jeb's just worried about himself here. Selfish.
Dude, yeah. No, another $5. Look at that. Mina hasn't been here a while. Mina came in with the 5 as well.
Mina
So
got a
thank
new
you,
profile picture
everybody
too.
that's supporting. Appreciate it. Thank you guys. All of that means something. We're very grateful that you guys show up here each week and continue to be part of the show and the growth and everything that comes along with it. Yeah, thank you. Josh, there was a question here, or a comment rather. I wanted to put it on here, and I had clicked it on. Somebody was talking about insurance. Oh, what is this? Crack kills. Says
Crack kills.
a small life hack on home insurance. Shop around if your premiums go up. I've hopped from State Farm to AAA and back and forth several times. When one of them, when one or the other raises premiums, they tend to like new customers. Always a good idea. Every year, shop around a little bit, right? I mean, my insurance goes up. Just call and say, hey, why is it going up? And then ask them to shop around and or go shop around on, yourself and see if there's anything else out there. That's essentially what I did with the car insurance, right? I asked my carrier, hey, can you check this out? Because this seems crazy to me that I'm still paying the same price from 4 years ago when the value of my car has depreciated tremendously. And he said he went and searched around and he's like, I can't find anything any different. So I was like, well, I'll go see what I can do. Mine was cheaper. So I'm going to end up switching for that reason, with the hope that I never have to use it. So
I think I told you guys, my insurance when I bought in 2002 was like $1,000 a year. Up until 2 years ago, it had gone all the way up to $1,200 a year. Last year it went to $1,500, and this year it's like $1,900. So $700 in 2 years, and that's from being with USAA for all that time. I will report back on this. This is my job here by the end of the year to find some time, shop it around, and we'll find another reputable carrier. And I bet we will get it. Maybe we don't get all the way back down to 1,200, but we'll get it under 1,500. And that's just that process of taking the time and energy. So definitely very good advice, because you'll find someone that doesn't require the massive premium that your current insurer thinks they are entitled to.
exactly. Brad is the winner this evening with a $50 super chat, coming in strong.
I believe that's the second largest all time. Someone went with a
somebody gave us a
99.99. So it was
somebody-
99.99 at one point. But
Yeah,
I believe
there was a $100
that's
one
a
at
solid
one point.
second place.
Thank you, Brad. That's awesome. Brad has a question. Says, buying my first house, purchase agreement signed with sellers, currently shopping rates with brokers before making a choice and starting the appraisal. My realtor is pushing me to her preferred broker, even though I am pending offers from others. Thoughts? Listen, I don't push anyone to use Josh or anybody else in my field, but I do recommend that they at least have a conversation with them for a couple of reasons. One, I trust them, and I trust them with my clients, right? So I would use them. I would hope that the same level of service that they provided to several of my clients over the years and myself that they would provide to you. And I know that to be the case. That's why I would recommend them. Also, you know what they're telling you to be true, right? That's why I use Josh. When Josh says, hey, this can't be done, or this can be done, but these things are potential issue. And that's what I need to hear. I don't need everything is perfect, or there's no way to solve it. We need to say, hey, this is the problem. This is how we can do it, or we can't do it, or whatever. That's why I'm recommending somebody I trust. So what I would tell you is that realtor's probably doing it not necessarily for their own benefit. Their benefit is to get you to the finish line, right? And your benefit as well. But it's also to know that the job's getting done and that they're not going to have to chase a lender around, so on and so forth. So I know a lot of people get pushed off by that, thinking, well, they're just doing that because that's how they get paid. I don't make any money when Josh does a loan for my client. It's a RESPA violation. I get $0 from it. I get the satisfaction of knowing my client's in good hands. That's why. So don't think it's a bad thing. But Brad, if you haven't done so, I don't know where you're located, reach out and have a conversation with Josh, in addition to that lender. See where rates are, see where fees are, make a decision, right? You could be getting a great deal. You could get a better deal. So doesn't hurt to have a couple of people checking around on your behalf.
Jeb, two weeks ago, we did the episode, and it's actually entitled Do Not Shop for Your Mortgage, but you should shop for your mortgage. It tells you the things not to do when shopping for a mortgage. So the only thing you mentioned, shopping rates with brokers. I get people who say, well, someone is $500 lower. Can you match that? So can we? We can, but this is pretty important. Like the vast majority of lenders, whether you say it's an 80-20 industry or a 95-5, are some variation of incompetent, poorly priced, unprofessional, not good at what they're doing. We have a listener, Jeb, right now to the show that I didn't get it because we got them better terms. I got it because they reached out a week into process and said, hey, we are being told we don't qualify. I go, what do you mean you're a week into it? Well, he said he didn't know that we were out of work for a year. We got into a car accident. One was off for 3 months. One was off for a year. So I said, well, first of all, it's not a problem. I said, second of all, what do you mean you didn't tell him? I said, did you give him an application? Did you give him pay stubs? Did you give him W-2s? So, okay, the application says you've been on the same job. I'm supposed to look at those W-2s, and they tell me that you made 50% as much as you should have last year and year to date, based off of the hourly rate. So that's me. I failed. The loan officer failed in that situation. So we left it at that. They're like, okay, we feel better. They come back a couple of days later, and there's a whole nother fiasco that they had not analyzed the tax return for rental income on a rental property that they have. And there was a loss there. So turns out we're going to make it through by the skin of our teeth, but it was a very complicated file. And they went with someone that they found on social media. And I say, I would never tell you don't find someone on social media, YouTube social media. Lots of people find us here, but you get that sort of used car salesman approach where not in a bad schmoozy way, but they're friendly. They're good people. Like these girls were like, how do we tell them we're not going to do the loan with them? I go, how do you tell him? He failed. You're 2 weeks into this and he's finding out things that before you ever should have written an offer, you failed. So it is important to get good terms. But if you focus on the lowest interest rate, we get calls every week. Jeb hears me hang up the phone and go, you are not going to believe this one, at least once a week. And it's rarely they go, this guy was an asshole. I've hated him from day one. They're like, I can't believe this. He was so friendly. He listened. He knows my kid's name. He knows my dog's name. He's going to send us a Christmas gift. And you're like, I get it. When you're not good at your job, those are the things you have to do to try to get people. So long-winded way of saying, measure more than just the absolute lowest interest rate. And if the preferred lender for your realtor is in the ballpark and comes highly recommended, and you can do your research, you've had good calls with them, they've got 155-star reviews, then I would weight the fact that they have a relationship with your realtor to some degree. Is it a 30% weight? Is it a 10% weight? Probably 5 or 10%, but there's some weight that you should give to it.
All right. Jamie says, do we wait to at the renewal to change insurance, or can we do it I can't speak. Or do we generally get protected based on when we switch, prorated when we switch? Jesus. You can switch insurance anytime is the easy answer here. Anytime you'll just get reimbursed for any paid premium that you've already paid, and then you start paying with the new insurance company whenever. So feel free to change insurers at any point that you find it helpful to do so. Joyce, $10 super chat. So thank you, Joyce. I think that's $125 you guys have contributed this evening. It's very kind of you guys.
Jeb's kids get nothing, but he's eating good for Thanksgiving.
Oh, baby. So good. So good. No, you want your kids to eat well. Like you want them to eat good food. Well, here's the problem with that, Josh. My middle child loves steak and he loves ribeye and he loves a bone-in ribeye. So when we go out to dinner, guess what he wants to order? A bone-in ribeye. Well, there was a day when a bone-in ribeye was like $35 or $40. That's not the case anymore. Though it's like a $70 steak for a 10-year-old. And then my oldest likes sushi. My wife and I used to be able to go to sushi, and these kids would eat little teriyaki bowls, little kids. No, that's not where we're at anymore. The kids like sushi now. And so now we got sushi. So, just be careful what you hope for with your kids. I hope they like ramen for the rest of their lives. Ramen. That's all I want them to like. All right. Josh is the man. Torio. Josh is the man. Perfect amount of ACD to get
OCD,
your loan done.
my friend. OCD.
Dude, I can't.
Not ACDC. OCD.
There we go. OCD to get your loan done the best way. Been watching you guys for 2 years now. Bought my house before I found them. Wish I had found them first. So thank you for that. Thank you.
100%.
And I need to take a picture of what I watch the screen on from here so you guys can see. Like your chats are literally like this big, and they're about 3 feet away, and I'm trying to read this. So anyhow,
I can't.
I like this. Susie says go to Costco. Going to Costco. So
every you're gonna get a Costco pizza and a hot dog.
That sounds delicious. The pizza part,
slicing a dog is never bad.
It's good stuff. Problem is, we gotta go to Costco. I do go to Costco. I'm actually going to Costco on Monday. I do a client event every Tuesday, the Tuesday before every Thanksgiving, and I buy pies for my clients. And I used to get them from all these special bakeries and all this stuff. And then I realized that Costco probably has the best pies, taste-wise, of any of the places that we get them from. So we started getting them from Costco. Everybody loves them. So I'll go spend a lot of money here at Costco on Tuesday. Your contribution is going to help pay for these people's pies. So thank you for that. Yeah. And you can get an invite if you work with us. That's how it works. Anyhow, it's an hour on the show. We will be back next Wednesday, believe it or not, to talk about the economy, talk about housing, talk about anything you guys want. It's the day before Thanksgiving. Probably won't be a super serious show, but we'll be here to chat with you guys. So we hope to see you then. If we can help you in any of the states that are in this little photo here, we would love the opportunity to do it. If you want to get in touch with us, you can use that referral link in the description of the video. And lastly, if you want to have us watch rates for you, you can do it by going to jebsmith.net/rate watch. Till next time, guys. Adios.
Amigos.